Hi, welcome to Daily Insights That Matter. In this episode, we will talk about the latest US GDP estimates. We will then dive into the latest insights from the OECD Economic Outlook and also talk about Indian markets hitting the historic milestone of 4 trillion market cap and what it means. Now, first up is the US GDP. The US economy showed even more strength than initially seen in the third quarter, with the GDP revised upwards to 5.2% from 4.9%. Now, this marks a significant uptick from the 2.1% growth seen in the second quarter and was better than the 5% forecast from economists. Now, this chart shows the breakup of GDP components. The upward revision in growth came from a lift from companies building inventories in anticipation of future sales, which added 1.3 percentage points to the quarterly growth. Now, also driving the third quarter growth was an uptick in spending and investment by the US government. However, consumer spending, which carries big weight in the US economy, did see a minor decline. Now, we see that the US economy is holding its ground despite the Federal Reserve implementing 11 interest rate hikes since March 2022. We see that many aspects of the economy seem to be in decent shape. Some sectors are experiencing growth and consumer spending is still showing strength. However, there is a cloud of uncertainty hanging over whether this growth can be sustained. As we look ahead, the US economy faces risks from global challenges and monetary tightening. Now, although a slowdown is anticipated, one positive note about the US economy is that it has managed to avoid a recession this year. On the global front, the OECD's Economic Outlook report is out. Now, there are three key points that caught our attention. One is the global growth estimates. Global growth is set to moderate from 2.9% this year to 2.7% in 2024. But the world economy is also projected to grow by 3% in 2025. Now, the second key point is about the anticipation of a slight slowdown in the global economy next year. However, the silver lining here is that the risk of a hard landing has subsided, offering a more optimistic outlook. The third point emphasizes the critical role of fast-growing Asian economies in sustaining global growth. Now, this dependency shows the growing economic significance of Asian nations in the global landscape. Now, if you look at this chart, India tops it with a GDP projection of 6.1% and 6.5% in 2024 and 2025 respectively. Indonesia is expected to grow at 5.2% in both years, while China is expected to grow at 4.7% and decline to 4.2% in 2025. Summing it up, the key points are that the GDP growth in 2023 has been stronger than anticipated, but it is now easing due to tighter financial conditions, weak trade growth, and lower confidence levels among businesses and consumers. And this impact will be seen in 2024, but the organization also expects improved growth in 2025. The report also highlighted some near-term risk, including geopolitical tensions and the impact of monetary policy tightening. In a historic milestone, the combined market cap of all companies listed on the BSE has soared to an unprecedented $4 trillion. Now, India now stands only behind the US, China, Japan and Hong Kong, contributing about 3.6% in the world's market cap. Interestingly, when looked at the returns delivered in 3 months and the year-to-date performance, India has outperformed other global markets, delivering the highest growth. In terms of the biggest contributors to this impressive rally of the BSE stocks, Reliance led the pack, followed by TCS, HDFC and ICICI Bank. Moreover, the inclusion of several IPOs into the secondary markets have also added to the market cap. With the $4 trillion market cap, Indian markets are now valued more than India's GDP for fiscal year 24. The market cap to GDP ratio, also known as the Buffett indicator, is a measure of the total value of all publicly traded stocks in a country divided by that country's GDP. Now, it basically compares the size of the stock market to that of the economy, and India stands at a market cap to GDP ratio of 114 times. Now, even though it has crossed 100, which is deemed expensive, it is again relatively better than most countries seen on this chart. Now, BSE's market cap crossing the $4 trillion milestone, coupled with Nifty crossing the 20,000 mark, have been significant developments in the Indian stock market. Furthermore, the recent revisions by big brokerage firms like JP Morgan, Morgan Stanley, CLSA and Nomura upgrading their outlook on the Indian markets also bodes well for the Indian stock market. Having said that, this is me, Merlisana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.